Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. If you need help with anything, check out finding-value.com. That's where I dive deeper into all these topics and subjects, looking for potential investment opportunities and sharing them with everyone in the community. This past Q&A session, we went over some of the earnings conference call transcripts, what I thought were the good highlights of them, so you guys can get kind of an inward-looking view of what the insiders are thinking about their businesses and a little bit better information about the businesses themselves. If you're interested in joining, we have a coupon code special, which is active right now. Special is the coupon code, 50% off the first month and a larger discount on the yearly membership if you're interested in joining. All right, so let's dive in. Let's take a look. We've got the DXY behind me, and we do see a pretty strong down move today, down 0.91%. We had a stronger dollar breaking out here, and all of a sudden, we had a big shift in the DXY and also interest rates. I do know that Trump wants a lower dollar and weaker yields. I know Besant has also talked about this. And there's been a lot of news that was released today about some of this stuff. So they released some GDP news saying that we were going to get 2.3% increase in GDP. That has now been revised lower. They revised it first down to like minus 1.5 or 1.8%, and now they revised it again to be minus 2. I can't remember the exact 2.3 or 2.8% decline in GDP, and I think that's having an impact on interest rates, the dollar. There was other news that was released on top of this, and I'm pretty sure they're doing this all on purpose. But OPEC is going to bring on some more barrels, 143,000 barrels, I think it was, of production per day, starting in April. So they released a few things of information kind of all at once to try to, I think, get interest rates in the dollar down. But here's the dollar down 0.9%. We've got the 2-year yield that continues to fall. We are falling pretty rapidly, and this is usually what sparks market sell-offs, can be this rapid decline into the bond market. So that what this is people are running into bonds and buying bonds, forcing yields down. So the 2-year was down 0.68% today. The 10-year yield, which I think they are really trying to push down, was down 1%. And then the 30-year yield was down 0.67%. And we are coming on back. Now, what's kind of weird and funky about this is that we had very strong signals coming up here, and this is all strong to break higher as we broke out here. And if you notice, ever since then, we've basically have 1, 2, 3, 4, 5, 6, 7, 8, 9 straight down days of the 10-year yield and also the 2-year yield. 1, 2, 3, 4, 5, 6, 7, 8, 9. Also 9 straight down days of the 2-year yield. And these were, at least the 10-year was looking good to go higher. But we had some massive selling pressure here. Or I should say buying pressure of bonds, downward pressure for yields over the past 9, 10 days. We've got the TYX-TNX ratio. It is moving higher. That has generally been a good indicator for gold to go up. That's been moving on up. That looks good. And with weaker dollar, weaker yields, and this moving up, that's generally a pretty strong tailwind behind gold. Bond prices are up a little bit on the 20-year. They are up 0.16%. They do look like they could maybe continue higher to the upside, which means yields could still fall lower. And I know that that's what the insiders want. I know that. They've come out and said it. The 2 and the 10, we are actually inverting a little bit today, weirdly. So we're inverting a little bit today, and that's not necessarily a recession outcome, but I know they're trying to hit the 10-year yield, and they hit the 10-year yield harder than the 2-year yield, which this came up a little bit today. So that's what occurred. And this still looks good to go higher, not lower, in the very short term. I don't see a ton of selling pressure here in that circle. So that still looks like it's favorable for an upward move. But if we actually do get a real recession, you would see the interest rates drop on the short end generally faster than the 10-year. And this would come down if that recession transpires. Gold's up $53 an ounce. I find it highly weird that we've got these big candlesticks before this. I think a lot of this looks really weird to me. Like someone's in here trying to play with the markets massively. They're playing with the 10-year yield, and I think they're playing with gold because why would you be coming down here with interest rates in the dollar? Well, the dollar was strong a couple of these days, but generally when interest rates start to drop, generally gold goes up, not down. And that's where it garnered its safe haven asset status, is when the yield curve starts to fall, yields drop, and gold generally goes up during that cycle. And that's what the TYX TNX is. That's this here, and we've got it going up. So I find it highly weird that gold got smacked as big as it did here with all of the conditions behind it looking good. So I just find that weird. Silver's up 2.14. That still looks fantastic, sitting on top of a lot of support, and it is in an uptrend. So that looks good. Platinum's up 3.16%. Pretty big day today in platinum. We're still within the pattern, and we still need to break out of it. So that one could be explosive whenever it decides to go. And then palladium up 5.76% today, bouncing off support. GDX down slightly, GDXJ down slightly, and SILJ down a little bit more, down 0.84%. Surprising, this is what's surprising me. These guys are now making more free cash flow. We have oil that is down today, and we've got gold and silver that are up about 2% each. And the gold and silver mining companies get sold off. Does that make any sense? Yes, being patient does play, but that just doesn't make sense to me, is what I'll say. But it was down today a little bit. We've got XAU to gold ratio that was down massively compared to its metals. Because I mean, obviously GDX was down, or XAU was down, and gold was way up, so you're gonna get a big negative candlestick. Maybe market players don't want money to rotate into gold and silver mining companies. Maybe they want it to be held down, and they don't want money to flow out of the S&P 500 and the NASDAQ. They don't want it flowing here. That's the only thing I could say. You've got every single metric for free cash flow for a mining company to go up under would be lower oil and higher metal prices. And we got that to like the max. So what else? I mean, it's kind of like, what the heck, guys? We've got crude oil down 2% with that news being released. And I think the news is twofold. It's the revised GDP number coming out of minus 2 point something percent. And then you've also got a little bit of production supply going up from OPEC. And it's the double whammy there. But 2.11%, it's still holding on. We'll see what happens. This was starting to gain some momentum to try to work its way on up, but they killed all momentum today of that. We've got TTF gas up 3% back within the upward channel. We've got natural gas in America up big today, up 8%, with a nice big bullish engulfing looking like that wants to go higher. It's a falling flag, or it's a flag pattern, rising flag pattern that we're we're breaking to the upside, so that looks good. Our boy XOP, yeah, you know me, getting hit really hard today, down almost 5%. And I don't know if this is, it's right on support here. And I don't know if they need to get an entry point, the big boys here, so they got to scare all the retail guys out of it. This is that I left that pattern in there. So I took this pattern here, copied it, and flipped it, and it almost looks like it's saying that we could get a dip here. And here we are getting a dip right where basically it says, so this portion here, as you go backwards, that is this movement there, this pullback is what could occur as we go on up. And a lot of the times you see a mirror image on the right hand side from the left hand side. If you're projecting that over, it's because all your resistance levels are all roughly the same as you come up and hit things. You get similar resistance support levels. OIH down 5%. This doesn't look that pretty. Pretty big selling pressure today. A lot of people just getting liquidated out of their positions. It's not a super bullish looking chart. We've got a rising wedge that we've broken to the downside. And now we're flirting with making a new, well, we're not flirting, we did. We made a new low, and we'll see if we can pump back above it tomorrow. What the bounce looks like. I mean, if it's small little candlesticks coming on up, that could easily roll over. So we'll have to see what that looks like and what follow through, or we could easily get more selling pressure. We finished this day quite strong towards the low and not much of a bounce. Here's the bounce that we got towards the end of the day, but not much of a bounce. So we've got some good momentum that we need to turn around if we are going to see a move higher. Newcastle coal futures up 1% today, and that is back to support. We've got Sprott Physical Uranium Trust down 3.85. Basically everything getting hit. It's back to support though, because we did try to do a breakout here of this support line coming down, and we broke out, and we're kind of doing a retest, and we'll see if it holds. Uranium futures pricing moving sideways. It's looking better. Usually you start moving sideways, or your pace of descent starts to slow down. We've got URA down 5.28%. Pretty strong selling pressure coming out today. It's across the board though, guys. There's a lot of selling pressure everywhere. URNM down 6% and URNJ down 8.37%. So the momentum is still to the downside. It hasn't turned. We are entering a lot of support in this region here, right through there. So we're in the support region. We just haven't gotten it yet. And fear is overwhelming that support. So now what we want to see is what kind of follow through is there? Do we get larger selling pressure? Do we bounce? Do we go sideways? Do we get a strong bounce? We have to wait and see. Copper's up 0.85%. This is holding quite strong. So I'm surprised that the market of copper is holding as resilient and as strong as it is. And we're getting this news of from GDP now that we could be declining 2.3% or something like that. Why isn't it showing up in the copper price? Just an observation. We've got COPX down 1.23%. That looks a little bit on the weak side. And equities across the board, we're getting sold off. Iron ore up 0.4%. And we're holding on. So we've got a breakout and then maybe a potential retest there before a move higher. We've got aluminum up 0.64%, but still below a key resistance level, which could eventually be a total launch if we break out of that. And there's your lows coming up into it. Getting a squeeze going here. Nickel moving sideways. It's still doing its own thing. We've got Mu down 1.13%, and we are still within the pattern. But again, everything sold off today, and we could go lower here in the short term if everything continues to sell off. We've got emerging markets down 0.88%. There we are. And what's surprising about this emerging markets is that we had yields fall and the dollar fall quite rapidly. Perhaps um, maybe news released to the recession, maybe that has something to do with it. The negative GDP number. KRE down 1.4%. We've got TAN down 3.2%, looking pretty weak. Lots of selling pressure the past 3 days in TAN. Lithium holding quite strong. It's right on support of this big consolidation and then the breakout and then the retest. And we'll see if that holds. Sometimes market forces can overwhelm the pattern and pull us back more than what we normally would. REMX down 1.36%, pretty strong selling pressure today. But again, we saw that across the board. It wasn't just this sector, but we could see further downside if selling pressure continues across the board. Baltic Dry Index was up 6%. That might have been from last Friday. It says Monday. Let me see here. It says Friday. So anyway, that looks good to go higher. We've got XHB down 2%. And again, this doesn't look good with the rising wedge. It does look a little bit on the weak side, and we're getting some strong selling pressure here today, and we'll see if it continues. We've got Russell down 2.8%. We're back to support, the support line going across there. We're back to that. We've got the S&P 500 down 1.76, but we're still above support coming across here. But these candlesticks are getting pretty large and elongated. Lots of selling pressure being applied to the market here. NASDAQ also selling off pretty heavily the past 1, 2, 3, 4, 5, 6, 7 days. Pretty heavy selling. This is also evidence of distribution, which means we could see this pull back more. And if we start to see everything sell off again, then everything will sell off. Doesn't matter where you're at. SMCI selling off 13%. Look at the selling pressure over here. Wow. We've got NVIDIA down 8.8%. It's broken through its support level. And that does look like it is immune to a potential, we could see further downside. Distribution candlesticks are laced all through here. We've got Bitcoin down 8.5%, kind of a weird deal going on. I think there was a pump and dump that occurred over this weekend about some strategic digital coin or whatever. But big selling pressure today, down 8.5%, and then minus 15 on Ethereum. This isn't good. This is a ton of pressure coming out. Lots of selling, and that momentum is still to the downside. The big boys want this to go lower, apparently. We've got MicroStrategy holding on, but still down 1.77. And then we've got the VIX spiking, where we could see a big run higher in the VIX. This is your resistance line that could break and move on up. So we could see continued selling pressure, and it could maybe even get worse if this breaks and starts to spike higher. We are releasing out of this resistance area. So we'll see if that happens. And this is the model here if you guys want to see it. U.S. Atlanta Fed GDP Now model sees U.S. first quarter growth rate at minus 2.8%, down from 1.5% in previous estimate after ISM construction spending reports. So that's what came out and potentially smoked this thing to the downside across the board here. But that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Specialist the coupon code if you'd like to join. And that's all I've got for today. So we'll catch you next time. This is Finding Value.